Corn, soybeans, and cattle all pulling lower ahead of Tuesday's grain stocks report from USDA. AgDay's Michelle Rook has more on what the industry is watching in markets now.
A mostly lower day in grain and livestock futures trade on Monday. Mike Miner is joining us with analysis. Some pressure in corn and soybeans, but Mike, man, with the weather the way it is, was some of that harvest pressure.
Oh, for sure. We've really ramped up in the past week here. We had the immense harvest success that we saw last night in the progress report. So I really think at this point we've seen some harvest pressure hit the soybean market and hold us back, at least after some of the poor news we got, whether it was the Argentina news and then the lack of a China trade deal. This market hasn't had a real reason to say, you know what, watch out if you go on the short side because something could happen. And at this point, it doesn't appear that anything has a possibility in the short term of making these shorts get hurt.
And then corn kind of running up into some chart resistance again, but we also have the report coming up today, quarterly stocks. So market may be a little apprehensive going into that.
For sure, this is a big report historically. We really like to move around this day and in this report. So, whether or not we have an interesting situation during our 11 o'clock report will be one thing, but normally the market really likes to trade it. I would suspect that we could find some more corn laying around in the countryside in this report than maybe what was expected. And I'm not the only one in that camp. So maybe a little bit weaker here. Still haven't filled that gap on the chart as well. Higher up, we've played in it a few times, but that's been a little disappointing as well. So, nonetheless, most of the time you'd expect fireworks in today's report.
Yeah, 432 and three quarters is that dumb gap area we can't seem to fill. Okay, cattle market set back, but in the Fed cattle, the cash market's kind of holding us back there, isn't it?
Yeah, a little bit. And actually, we're inverted now. The north is lower than the south market. And it's been quite some time since we've seen that. This time around, cutouts gone down about $40 and taken a really big hit there. But this time, cash drug down with it. And the last few times you've seen cutout go lower, it hasn't been able to move the cash market.
No doubt. Thanks so much, Mike Miner with Professional Ag Marketing, and that's Markets Now.